Welcome to another episode of Perspective. Here we want to talk about how to find investments in stocks and real estate, winning investments. The first thing we want to talk about when we're trying or attempting to find winning investments, let me just break down something real quick. I'm going to take it to an old ideology. Most of the time, you're going to find good investments through word of mouth. Philip Fisher, who was Warren Buffett's qualitative teacher, he said 80% of the time you're going to find a good investment from other great investment men. So usually the first thing you're going to hear from word of mouth. But if you're looking for a particular investment or you're looking for some sort of investment and you want to know how to go about finding these things on your own, I'm going to tell you the steps that I take. I learned these things over many years of study. It took me about 10 years of investigation and asking questions and being around certain individuals so I came up with my own investment philosophy, which is growth oriented value investing. I wouldn't recommend day trading for anyone for the reason that no one can pick what the stock market can do on a day-to-day basis. Anyone that say they can do that, they either a liar or the devil, one of the two. No one can do this on a day-to-day basis. But over time, if you're picking good investments and you're making wise decisions, you have a good investment philosophy, and you have good picking skills and criteria that you have laid down for yourself, you'll be able to find good investments. So the first thing I want to talk about is the criteria. So generally for myself, I'm really only looking at two things. The two things that I'm looking at when I start off trying to or attempting to pick an investment, I'm starting with two things. I'm either looking at value or I'm looking at growth. Those are the two things that I start with. So if I'm looking at value, I'm typically looking for a good to great investment that's selling below a price that is really worth or what it would typically sell for. The second thing, if I'm looking at growth, I'm looking at something. If I'm looking at growth, maybe I can find an investment that has value and growth. That's great if I can find that. But typically that's not the case. It's either one of the two. So if I'm looking for value, again, I'm trying to find an investment that's worth more than what it's selling for. The other thing, if I'm looking at growth, I'm looking at an investment that's growing exponentially. What I mean that is growing at a fast rate, faster than what other investments that are similarly situated would grow. So now, when I'm looking at my investment universe, we're talking about either internationally, globally, which those are global stocks, which are all over the globe. You'll find them in China, Korea, India, all over the globe. Those are just some examples. Then you have nationally. When I'm looking at an investment nationally, I'm typically, if I'm looking at stocks, I'm looking at the Wilshire 5000. You can go and investigate these things on your own. I'm just giving you some groundwork, some playing field of groundwork, something to work with. So you can. I typically look at the Wilshire 5000, which is one of the bigger stock exchanges. Will have a lot of investments to look at. The S&P 500, the Nasdaq, which typically has a lot of technological investments. And if I'm looking at real estate, I'm looking at Redfin and Zillow. Information. Through my years of research, I found ways to get straight to the chase. If I'm looking at stocks, I'm usually using a stock screener, or I'm reading certain financial publications. One of the best stock screeners that I use, and you guys can look it up, it's called FinViz, FINVIZ. You can just list criteria in there of the particular stocks that you're looking for, whether it's a number or a qualitative criteria. And FinViz will just give you a bunch of stocks that you can look at that fit the criteria that you want. Now, if I'm looking at, for instance, a value investment, I would typically go with a price to earnings ratio below 14. If I had a price to earnings ratio of 10, that means for every dollar I invested, I automatically would be assuming a 10% return just on what I'm putting up. The price to the earnings. So if I'm putting up $1 in price, if the PE ratio is 10, and the inverse, the yield, is a 10% return. So typically I would go 14, which is 7% or more. So 14 and below is typically the PE ratio that I'm looking at. If I'm looking at and you can put all these criteria in FinViz. Another publication I like, financial publication I like, is the Value Line Investment Survey. You can look these things up. You can go in the Value Line Investment Survey and you can find these criteria. It's a ton of spreadsheets. I'll put one up on the screen that you can see and you can look at it. I put one up for Alibaba. You can look at it. That's been an investment I've been talking a lot about lately, just because it's been beat so down in financial publications because of the regulatory dramatics in China. But however, it's a company that's making a ton of money. It's a bigger version of Amazon. Another criteria I would look at is CAGR, something called CAGR. That's compounded annual growth rate. So if you took $1, just to give you an idea, an overall big general idea of what CAGR is, just generally, $1 turns to 2, 2 turns to 4, 4 turns to 8, 8 turns to 16. You get an idea. I read Bill Gates' book, The Road Ahead. He spoke about a parable. There was a king in ancient Middle Eastern times, when we're talking about the powers of compounding. He said that this guy saved the kingdom from famine. The king told him that you can have anything you want in the kingdom. He said, simple, for every grain of rice I put on a chessboard, for the next square, I want you to double it. By the time he got midway, or excuse me, 3/4 through the chessboard, he owned everything in the kingdom. Just to give you an idea of what compounding is. So in a stock screener like FinViz, or maybe the Value Line Investment Survey, I would be looking for a CAGR of 1 or above, a positive number. Another criteria I would look at is return on equity. I spoke one time I spoke with an individual who once sat on the board of Colgate. We spoke about how great an investment Colgate is. I had a debate with a friend some years ago, and he was telling me how great Facebook of investment Facebook was. And I agreed with him. It's definitely a great investment. But then I brought up Colgate. I said there's over 1 billion people in this world. Just like there's 1 billion users on Facebook, there's 1 billion people in the world that use Colgate products. And they wake up every morning and they brush their teeth, and they're going to continue to do this. But then I asked him, could you see some technology in the future overtaking Facebook? He agreed. I said, people are going to wake up every day and brush their teeth. They've been doing this for 100 years. But Colgate, when we're talking of going back to return on equity, that's a company that has a 100% return on equity every year. So one financial wizard, he said that was like putting $1 in a company, getting $4 back. So when I'm looking at return on equity, I'm usually looking at a number of 15% or above. Now, another place you can use to get financial information is Yahoo Finance. Yahoo.com, their finance page, and Google.com, their financial pages. Tons of financial information on there. You can look at these statistics I use just as financial ratios, and you can find great investments. When we're talking about real estate, same thing, growth of value. But it's 3 things that I typically look at as far as giving someone advice, or if I was going to buy some real estate. So there's 3 methods. There's a cost analysis. There's an income analysis, how much income the property would bring in. The cost, how much would the investment cost. And then there's a comparative sales analysis. How much do properties in the area sell for? So I usually use some sort of mix, maybe 30%, or I might give more weight, 25% to this one, 50% to income, 25% to cost analysis, just to give you an example. And I would come up with that number and I would say this is how much the property is worth. If the property is selling less than that number, I know it's a buy. It's a value play. Or if the area is so hot, again, in growth, if it's growing exponentially, I know this is a property that I want to buy because it's growing so fast. The value or the price of it is growing so fast, so therefore it creates value. It's value added. Another thing you want to look at when you're judging real estate investments, you want to look at how long has the property been on the market. Another thing you want to look at is how eager the seller is to sell a property, because these things, the time that it's been on the market and how eager the seller wants to sell a property, may create some value as well, because the owner may be willing to give it up for a little less to get the property off his hand. Or the person who's selling the real estate, the agent, may be willing to give up a little bit less, a little bit more to sell it to you for less to get the property off. Another thing we're looking at again when buying a property is a fixer-upper. If you have a way to have the property appraised and fixed, that can create value as well. Vacant properties as well. Sometimes the owner wants to get rid of it because it's not creating any income or any value. And look for sales by owner listings. So these are just some of the ways that I go about finding winning investments. You can do the same. And I hope this information was useful. Real short, straight to the point. We don't beat anybody down with a lot of information, but here at Eunice Capital Management, that's the point. Democratization of information. We making information that was available, once only available to the wealthy, available to the everyday person. Thanks a lot. Thanks for viewing. We'll come at you again with more of these videos. Have a nice day.